encourage you to use the chat to connect and ask questions throughout. We have a jam-packed hour planned, so we need to dive right in. Here's a look at all we hope to cover today. We'll start with brief introductions from each of our speakers before diving into a bit about the series and each of the organizations represented today. As I said, my name is Olivia Ross. I'm a community engagement partner here at Citizens based in Johnston, Rhode Island. I'm so excited to kick off today's conversation, and I'm joined by a couple of wonderful people. First, Jackie Zimmerman, one of Citizens' good friends from Mental Health America. Jackie, you want to say hello?
Absolutely. Hi, everyone. Thank you so much for joining us today. We're so excited to be here with Citizens. As Olivia said, I'm the manager of public education partnerships and e-learning on our team. So if you follow Mental Health America, you see me on our webinars often. I'm creating content and educational materials for various populations and helping with our yearly campaigns, along with managing our partnerships like this one that we're so grateful for our friends at Citizens. So thank you, everyone. I'll give you a little more information about MHA in just a few minutes here.
Great, thank you. And then, of course, my Citizens colleague, Terry Goggins, who will be sharing his knowledge and expertise with us today. Terry?
Thanks so much, Olivia. Good afternoon, everyone. So much a pleasure to meet everybody, see how far everyone's coming from to join this webinar and talk about the importance of credit. My name is Terry Goggins. I've been with Citizens Bank for 10 years now. I currently work as a credit analyst with our commercial banking team. And I have a passion for community and giving these sort of presentations to cover these important topics because we want to make sure that the audience feels empowered to take control of their financial lives. So excited to share this topic and really engage with you guys and see what your thoughts are and see how we can help. Thanks so much, Olivia.
Excellent, thank you. Okay, so as I mentioned, today's session is the first in a series that Citizens and Mental Health America are collaborating on in the coming months. Our goal through the series is to start and continue a conversation on the role of economic security and its impact on mental health. Today's session will focus on the importance of establishing and maintaining healthy credit, but the conversation will not stop once this hour is up. Session 2 is on October 8th. It will focus on establishing a healthy relationship with money. We'll explore a variety of finance fundamentals, and the series will culminate in our third session to be held in mid-December with a discussion that will include representatives from Mental Health America, Citizens, and one of Citizens' national partner organizations, Junior Achievement. That session will explore the roadmap to achieving financial health. So we are so excited to have you all on this journey with us. First, just wanted to share a bit about Citizens as a bank. Citizens Financial Group is one of the nation's oldest and largest financial institutions. We're headquartered here in Rhode Island, but we have colleagues and customers in nearly all 50 states. Citizens offers a broad range of services to clients in different sectors, including individuals, small businesses, and large corporations and institutions, and more. At a glance, Citizens' mission is to help our customers, our colleagues, and our communities reach their potential. We do that in a variety of ways, including by supporting our communities. As I mentioned, Citizens has a presence in nearly all 50 states. Each place faces its own unique social challenges, and we strive to maintain a deep understanding of those so that we can develop the innovative solutions required to help people thrive, businesses succeed, and communities flourish. While specific challenges do vary by geography, the reality is that some of these struggles are shared across the board. We know that financial concerns are top of mind to many, with nearly 3/4 of people citing inflation as a source of significant personal anxiety and worry. Through our survey with Junior Achievement, we learned that 50% of teens express concerns when it comes to financing their future. So these worries are consistent and they're ever present. If we could just make sure that we're muted if we're not speaking, thank you so much. That's why Citizens significantly focuses our efforts in the financial empowerment space. We're committed to leveraging our resources, including our vast colleague network, to connect all individuals with the knowledge and skills they need to manage their money at all stages of life. Core to these efforts are our partnerships. I mentioned Junior Achievement. They're a national organization that we partner with to help prepare young people with the resources they need to overcome economic inequity. And we activate our colleagues to share their expertise in the form of delivering financial literacy across and outside of our footprint. And then we rely heavily on our community partnerships, including that with Mental Health America, which has allowed us to create this series together and expand the breadth of our reach and impact. With that, I'll turn it over to Jackie to share more about Mental Health America and the resources that they have available.
Absolutely. Thank you so much, Olivia, for that overview, and welcome everyone. I know we have folks joining who might have been invited by MHA, they might have been invited by Citizens, so some of you may be more familiar with Mental Health America than others. I'll try and keep it short and sweet, but we want to let you know kind of who we are and what we do. So we are one of the nation's leading nonprofits dedicated to the promotion of mental health, well-being, and illness prevention, and we do this through informed work led by people with lived experience. And so kind of our core areas that we work in are community education and engagement, just like we're doing here today. We have an extensive mental health screening program available through our research institute. We'll give you more information on how you can utilize mental health screens in one of the next slides. We have our advocacy and public policy department who is working on advancing mental health policy. We have workplace resources so that other businesses, organizations can try to improve their own employee well-being. And then we have youth programs and peer leadership. We have an incredible youth council and youth policy accelerator where we work with young people to get involved in mental health programming and advocacy. And lastly, we have information and referral services. I will note that we're a national organization, but you might have seen or heard of MHAs in your community. So while we represent our national staff, we do have MHA affiliates, over 240 affiliates in many, many states. So if you've engaged with an MHA in your community before, that might be familiar to you. And I think I lost our slides here.
Sorry about that. Just one second.
Thanks, Olivia. But today I just wanted to talk quickly to try to help bridge this gap of we're talking about credit and finances, but at the same time that's very intertwined with our mental health, our emotional health, our general well-being. And 1 in 5 Americans have a mental health condition, so it's not uncommon for folks to struggle with mental health at some point in their lives. And we know that stress of finances can have that significant effect on our mood and health, whether that be we're in a good financial spot and that's one less thing weighing on us, or we're struggling financially and that can really affect our mood and our ability to seek care. So we have research that backs all of this. A couple, just to note, a Pew Research report showed that worries about personal health and financial security are related to higher levels of psychological distress. Financial debt and loans are significantly associated with increased psychological distress and poor mental health status. So I think we can all say, as people with lived experiences, when we're struggling financially, it's harder to function day to day, and it's easier to feel that stress, anxiety, depression. I'll have you go to the next slide if you can. And it can kind of be cyclical. So as you can see in this, when we talk about mental health and having mental health struggles, that can make it harder to earn, manage money and spending, and ask for help, which leads to financial difficulty. Financial difficulty can cause more stress, more anxiety, more worry, and then increase our mental health conditions. And it can start at the bottom too, where maybe you haven't been struggling with your mental health, but you're struggling financially, and then that leads to that cause. So it can happen in a cycle, and hopefully by starting to work on our financial literacy, our financial health, our credit, that can be one way that we can take one of those things off of your plate when it comes to things that are burdening your mental health. I'll have you go to the next slide. A couple resources we have from Mental Health America that we wanted to share with you for today's session. The first is mental health screening, which is something I mentioned earlier. Mental Health America has a screening program where we have clinically validated screens that you can go on our screening site. Naya's going to put some of these links in the chat for us. And if you think you're struggling with anxiety, depression, OCD, and eating disorder, various types of mental health conditions, you can go on and take a screen. It will let you know if that's something that you might be struggling with, and then give you some resources and support of, okay, now what? Here's some next steps I can take. We also have our mental health conditions pages on MHA's website. These you can look through and find various information depending on what you're struggling with. And then we have a couple pages for managing your money, paying for care. I know all of these things can add stress when talking about mental health. So those are a few resources we have for you today. And Citizens is going to go in depth about some of the specific financial resources and information that you can use after today. So without further ado, I know Terry has so much great information for us. Terry, I'll hand it over to you. I just want to give another huge thank you to you and Olivia for this great partnership.
Awesome. Thanks so much, Jackie. I'm very excited to be covering the topic of credit. And, I always like to kick it to the audience and get your thoughts on things. I think the most comes out of these presentations when we can engage and have an understanding of our audience. So if you can, by using the chat, when you hear the word credit, what comes to mind? What do you think about when you hear the word credit? Just give me a short word or phrase, and I just want to gauge where you guys are at with that, so we can kind of go from there. Because Olivia mentioned, Jackie mentioned so many important things about how it ties to mental health, and it's so important, right? Like, I've worked in a branch for most of my banking career, and I would see people coming in and have financial distress because they didn't have financial literacy, and unfortunately, their credit suffered as a result, and they didn't know where to turn to get the education so they can empower themselves. So I know how real that is and how much of a strain that can put on your mental health. So I really appreciate Jackie providing those resources for you. And let's take a look at some of the things that you guys think of when you hear the word credit. So I'm going to read off a couple of them here. Your financial health, high interest rates, your FICO score, absolutely. Barriers to resources, I really like that one. Not your money. Oh, I definitely like that one. Not your money. Let's talk about that for a second. When you think about the word credit, it's a financial institution typically extending you a line of credit, a credit card. They're extending you money on the promise that you're able to repay them, right? So not your money really hits it on the head when you think about credit. And when I think about it as a resource that you can use to help with financial situations, right? You know that your income comes from your job or how you make your money every day, but credit is that flexible resource, right? So like if you need to pay for gas or groceries or everyday items until you get your paycheck, it makes sense to use a credit card for those things, right? Make sure it makes sense to have that extra resource. It's when you say not your money, that's really one of the best responses I see on there, because you got to think of it as whatever I'm spending, right? I have to pay that back. So it's important that you realize when we talk about credit that you have a plan. If you get extended credit extended to you, that you have a plan to pay that back, and that you make sure you're responsible with credit. When used responsibly, it is an excellent tool for things like buying your first house, buying a car, student loans, credit cards, or even personal loans. So when we think about credit, it's important to know that you're being extended this money from a financial institution typically, and it's your responsibility to pay that back. And I'll read off a couple more of these responses. I love it. Credit, lack of credit, overwhelming, can be stressful. Ability to obtain property, you can make money with it. You can use it for non-for-profit companies. There's all these great answers that you guys provided, and we're going to get into your credit report. This presentation today is going to talk about your credit report and the things that are contained in it, right? So like if we have a financial institution that is going to extend us credit, what they typically do is they want to look at your credit report. And why do they look at your credit report? It's because they want to look at your ability to repay those extensions of credit. So in addition to obviously your income, because they want to make sure you have enough money to pay them back, we also look at that credit report, which contains things like your credit history. Have you been on time with your previous payments before we extend you some credit? So we want to be able to talk about those things. And on your credit report, as you can see on your screen, we have your identifying information like your name and your address, but it also has your debt and your bills, your public record information, and information about any inquiries for credit that you may have had in the last few years. So that's important to talk about, and I always like to gauge the audience, and I appreciate that you guys are chiming in with that. On the next slide here, we're going to talk about the agencies that report your credit. So there are three main reporting agencies: Experian, Equifax, and TransUnion. And what they do is they come up with a score based on the information we just talked about: your payment history, other extensions of credit, how much total debt do you have out. And what they do with this is they create a model that will help generate a score that the financial institutions will use when you're looking to get a car or a mortgage or a student loan. So it's important to understand these three companies, that they are the ones that the financial institutions look at when looking at and examining your credit. So it's important to make sure that, and we're going to talk about over the next few slides, that the information that these three agencies are reporting, we want to make sure that that's accurate. We want to make sure that they have the best possible information. And one way to make sure you feel empowered is to make sure you know what's on your credit report, and is everything accurate? And if it's not accurate, what can we do, right? What can we do to make sure that they get the up-to-date information, and that I have an accurate credit score being reflected, and I can now make sure that credit score can help me get additional extensions of credit and the best possible rates. Because as we know, the better your credit score is, the better rates you're entitled to. Typically, the bank's going to consider you a lower risk, so they're going to give you healthier and more attractive rates to obtain you as a customer. On the next slide, we want to talk about something called being credit invisible. So some people are just hands off. The best way in some people's minds is, you know what, if I just never get a credit card, if I never get a loan, I don't have to worry about having a credit score. I don't have to worry about owing anybody money. Again, from my experience in the branches throughout the years, when I've had these conversations, often the response I would get is, oh, I don't want to do anything with a credit card. I don't want to owe anybody any money. And that is completely understandable. But you want to understand that it's important that there is a such thing as being credit invisible. So never having any extensions of credit, it can be harmful to you. Not as harmful as owing a lot of money, but it can harm you in terms of getting extensions of credit. And the reason is because when the financial institutions are looking at your credit report, one of the things they're looking at is how responsible you are with your bills. Now, if your credit invisible, we still can't tell how responsible you are, right? We don't know what your credit history is. So I always recommend that when we talk about the word credit invisible, you think about getting a small credit card or a loan or something that's going to help you establish credit, because they just want to see, hey, are you paying your bills on time? Do you have the appropriate amount of income so that we can get you this loan you're looking for, or this line of credit, or maybe down the line you want to get a student loan for your child or your first home. We need to know what has your credit been like with some of the smaller things before we extend you this larger credit piece. So when we talk about credit invisible on this slide here, it's having never had credit before and being more cash reliant on things. So, when we talk about that, it's important to note that you want to make sure you find a way to establish some sort of credit. And I know we may have said this previously, but I want to make sure I say this, that at the end, we're going to do a full Q&A. And for those who missed it, we'll make sure we get you some resources as well. So if some questions are coming up in the chat that we may not get to during the presentation, we'll get to during the Q&A portion. All right, we can go to the next slide here. So as we talked about before, we talked about those three credit reporting agencies, and we talked about the importance of credit. This one, we want to talk about the Fair Credit Reporting Act. It's a law that establishes rights for you as a consumer. So it's important to know what your rights are as a consumer. Some of the things they have listed here is, anyone who uses a credit report to deny your application, they must tell you why. So like if you ever applied for a loan or a credit card and didn't get it, you should be getting a letter in the mail stating what reasons why you didn't get extended that credit. and it could say that you have some adverse actions on your credit report or your credit score was too low. So you want to make sure that you know that when you're applying for these things, isn't it important to know if you do get denied, what's the reason, right? I would want to know if I get denied for a loan or a credit card, I would want to know what the reason is, and then I would want to know what appropriate actions I can take to make sure I'm improving my credit. Also, everyone's entitled to a free credit report, and in a few slides, we'll actually talk about where you can get that credit report from. And we got to make sure that the credit reporting agencies are accurate and that they are reporting information that is up to date. And if they're not, and it's not up to date, on the next few slides, we're going to talk about what you can do as a consumer to make sure that that information is accurate. And we're going to go into the next slide here, and we want to talk about the basics of credit scoring. So when we talk about your credit score, there are two significant factors that affect your score. Whether you repay your debts on time as you agreed, right? If you get a loan, if you get a credit card, you're signing up with that credit card company, that financial institution, to say, hey, I am going to pay you back on time as we agreed. You extended me a $1,000 credit card. I'm going to pay that each month, and I'm going to pay it on time responsibly. So whether you pay your debts on time as agreed and your utilization rate are your two biggest factors that affect your credit score. And you want to know that your FICO score, which is there are two scores. There's your FICO score and your Vantage score. Your FICO score is the most commonly used one by financial institutions. And again, they take all that information that we talked about and they put that into their model to determine what your score is. But they take that FICO score from those credit reporting agencies. So you want to make sure that everything that they report is accurate and that you're doing your part in paying all your bills on time so that you're not negatively impacted. On the next slide, we're going to go a little bit deeper into your score. The 5 factors that affect that credit score model that we talked about. And I'll start with the biggest chunk, which is payment history. Again, the simplest way I can put it when we think about credit is all the financial institutions want to know is that if we extend you credit, that you're going to pay it back, of course, as agreed, with interest, with whatever interest terms you guys have. So that's why you see that biggest piece of the pie, that 35%, is your payment history. Because we want to know that if we extend you credit, can it get paid back on time? That second piece of the pie is the amount owed. What sort of debts do you have on your credit profile? A lot of times it's, car payments, mortgage, personal loans, student loans. That amount owed also factors a big portion into your score, your length of credit history, your credit mix, and any new credit that you may have had issued to you. Of course, this all is important and factors in and gives you the FICO score, and we're going to talk about what some of those scores are on the next slide here. So we'll start at the top. So people who have A1, top of the line, best credit, we consider that exceptional, and that's between 800 and an 850 credit score. People with these scores, typically, they can go and get whatever they want. They can get the cars that they want. They can get the preferred rate on mortgages and lines of credit. So when you're taking care of your score, and over time, this is what happens over time. You take care of your score and your credit and you're being responsible with credit, that's where your score can be over time. So they look at, have you paid it on time? How long have you had your credit? All of those things are very important when factoring that in. Next, you see very good, right? Very good, between 740 and 799. Same idea. You're still going to get preferred rates. You still had that really strong established credit history. And lenders are going to look at that and say, you know what, that's the one I want to lend money to, because clearly they've proven that they can pay their bills on time. That next one you see is labeled as good, between 670 and 739. Again, you can still get a good amount of loans and lines of credit, but the rates may not be as favorable as those first two options. And then they have fair, which is between 580 and 669. So again, they'll deem you credit worthy, but you may not get the favorable terms, which means you'll end up paying more in the long run. So it helps to make sure that when you're applying for things, you put yourself in the best credit position so that you can get the preferred rates. And unfortunately, at the bottom, of course, we have poor. And you're not in those situations, you're typically not going to get extended credit because the banks consider you a higher risk. So they don't think they're going to get their money back. So those poor scores are something that we're going to want to work on. And we're going to talk about ways to improve your credit and work on if you're in that poor score range, we're going to talk about some options you may have along the way. And then we'll go to the next slide here. So as I mentioned previously, we all have the right to a free credit report thanks to the Fair Credit Reporting Act. And the place that you can go for that free credit report once every 12 months is annualcreditreport.com. So you can go to annualcreditreport.com, to get your free credit report every single year, every 12 months. And again, you want to make sure you take advantage of this because you want to make sure that the information being reported about you is accurate. Don't just take it at face value. Oh, they say I'm a 650 or 630 or 770. It could be probably even higher than what they say if you get some things corrected that they may not have correct on your report. So you want to make sure when you get that report, you go through it with a fine-tooth comb. It's free. Why not take the time to invest in that and give yourself some, the opportunity to improve that score? You also have a right to additional free credit reports if you fall in any of the following categories. If you receive public assistance, or if you're unemployed, or unfortunately, if you're a victim of identity theft, or if you were denied credit for a service for an apartment or employment. That's another way to get your free credit report because they want to make sure you have that as a resource to you so that if you're denied for something and you're in one of these buckets that I listed, you can still get that credit report for free and go through what options you have to make sure you improve your overall credit score and have that report looking healthy. So as we talked about where to get that credit report from. Now we want to talk a little bit about how to fix some of those errors and identify some of those errors, right? So it could be you got a credit card maybe 6-7 years ago and they got the incorrect status of that account. Maybe you haven't used it, but it's not in a closed status. Maybe they have the incorrect balances. Maybe there was a late payment that actually wasn't a late payment, or maybe you got a late payment forgiven and it didn't reflect on your credit report. All of these things are very, very important that you want to make sure that you keep track of. Identity errors. Did they spell your name wrong? Did they have your social wrong? What are some of the things that are incorrectly reported on this? When you get that free credit report, really take your time and say, hey, it says I have a Citibank credit card or a Bank of America credit card. I don't remember ever getting that. Look and see where that could be from, because sometimes it could be from maybe you got a store card somewhere, maybe a Macy's card or something, and you may not realize that the bank that corresponds with that is maybe Citi or Bank of America. So it's important to know where your credit is being reported. So it's very important that you take the time and comb through and see what information's on there. And you want to make sure that it's accurate. So on the next slide, we talked about where to get the credit reports from, right? We talked about looking at where the errors are. Well, wait a second, Terry. So how do we report those errors? How do we make sure we empower ourselves so that we're able to get these things corrected? So you actually can go and dispute with each of the credit bureaus any errors that you may see on your credit reports. So you can write up a letter, or you can do it electronically. I know it's 2024, so I know people may not have stamps. So you can actually do it electronically as well. But the important thing here is it's each corresponding credit bureau has an address where you can send that to, or you can go to their website and say, hey, this is an error that has been reported on my credit report. And then you can offer any additional information that you may have to prove that information is incorrect. Maybe a statement or something of that nature that shows that you paid it in full if the report says you didn't pay it in full. So you want to make sure that when you are disputing these things, that of course that you're accurate in your disputing and that you have supporting documentation so that you can get those errors removed and make sure that you see an improvement in your credit score over time. So, if you don't have stamps, you can go to the websites and get it done electronically, but just take the time to do that because it's important to take care of that. Next, we want to talk about this. Unfortunately, there are situations where, again, as we talked about, you could be in that poor credit status due to such, maybe not good financial literacy background growing up, and maybe you had the unfortunate, thing of being where you were extended credit, but you didn't get it, you didn't pay it back, and it's affecting your score in the long run. We want to talk about how to make sure you have options to repair and improve your credit. So the first thing is, just as we talked about, getting and reviewing your credit report for any errors. Of course, making sure that you pay your bills on time. So we can't go backwards in terms of, if you have delinquencies from previous credit, but you can make sure that you're paying all your current bills on time, and you make sure that you're on top of all of your current credit situation, and make sure that you are using what you only really need, right? Being strategic with your credit limit. If you get extended, what you consider too much, let's say you get extended $10,000 for a credit card, but you know that your range is only $1,000, make sure you stay within that credit limit. Don't have your eyes get wide because the bank gives you a larger limit. The bank doesn't know your full financial picture the way you do. You know what bills are coming up, maybe what vacations you're going on, and what other things may eat up your cash and can prevent you from paying this back on time. Because if you take out that big credit card, it's going to feel impossible to pay it back over time. Because if you're just making a minimum payments, you're just going to be on a hamster wheel. You're going to be in a situation where you can't pay that on time. And unfortunately, it could go into delinquency if you start to fall behind on it. So you want to make sure you have a good strategy in repaying all your bills. Only apply for it when you need it. And at the bottom, there's an important thing I want to note at the bottom called a goodwill deletion. Goodwill deletion. And that's something you talk about with some of the credit card companies. Maybe it was just a lapse and you forgot to pay one of your credit card bills. And it was a ding on your credit report and you had a late payment. You want to talk to them and say, hey, that was a complete lapse on my part. I'll say on top of it, would you be able to give me a goodwill deletion so that they can put that information with the credit reports and not reflect it as a negative payment on your end? So that's something you want to discuss with the credit agencies or the financial institutions that you may owe money to. You want to talk about that as an option if you have gotten yourself in that particular situation to where you may want to have them delete, a late payment. So that is a option with some financial institutions where they may extend that to you. So keep that in mind. Another thing we want to talk about is building alternative credit history. So a lot of people, again, they don't like to go into getting the credit cards and the loans and things, but they want to make sure they get paid. They get credit for paying their normal bills on time, right? Their everyday bills, like their rent, childcare, your cell phone bill, electric, gas, obviously TV. There's more bills that you have than other than credit card, right? There are everyday things that you pay for and you need to sustain your life. So it's important on this slide when we talk about alternative credit history that you visit the websites of the credit bureaus to figure out, and they'll tell you how you can get credit for making these payments on time. They'll give you, a map as to how you can make sure you get credit for paying these things on time. So they may ask you to provide a lease or a statement from your landlord. They may ask you for some documentation, but if you can get credit for the things that you pay everyday bills, you want to make sure that you get credit for those things because obviously the more on time you're paying your bills, the better it is for your overall credit report. So when we talk about building alternative credit history, you want to make sure you're taking consideration the items that we have listed here, and you want to visit the websites of the corresponding credit bureaus so that you're able to make sure you get credit for those items. And as we talk about building credit, and we talked about that credit invisible piece, right? Sometimes you just have people to say, hey, look, Terry, I never had credit before. So I think I'm in a decent position to at least get started. Terry, how do I get started? How do I build from scratch? One of the things you can do is get a secure credit card. So a secure credit card is where you use your own money as collateral for a credit card. So you may go into a bank and say, hey, do you offer secure credit cards? And the bank may say, yeah, sure. We have secure credit cards where we'll take $500 from you. We'll hold that as collateral. But then we'll give you a credit card for $500 and we will allow you to make payments, pay for your gas, pay for your groceries, pay for things of that nature so that you can build credit from scratch. It's a good way to do it because it's secured. The bank doesn't see it as a big risk because if you are delinquent, we have your cash. We have that cash as collateral. But the whole point is you're using that credit card to help yourself build credit over time. And it'll improve your score as you see those on-time payments come in each and every month. They have the same option for a loan as well. You just have to check with the different financial institutions and see what they offer. But they have that same option with a secure loan. Same idea. $500 or $1,000. They'll structure it into a secure loan. And you're just paying yourself back essentially monthly so that you can build yourself up some credit. There's also the option of becoming an authorized user on an account. So maybe you have a family member that wants to help you build credit and they have good credit. They may put you as an authorized user on their credit cards to help you establish your credit. Just a note with that. Make sure, obviously, it's someone who is responsible. You don't want to be put on as a cosigner or not a cosigner. You don't want to be put on as an authorized user for a card that has a high utilization. So, be careful with that one. But if it's someone who doesn't really use it and they have a high usage, it can look good on your credit report if you have, this line of credit being extended to you that's not being used because it shows that you have a high availability. Also, there's the option of a cosigner. Oh, sorry about that. Also, there's the option of a cosigner, so you can get a cosigner for a loan, someone you trust, a family member, things of that nature. And there's credit cards you can get. And if you want to make sure that you're paying down your large payments as well. Thanks, Olivia. We'll go to the next slide. All right, so we just talked about building credit. If you're someone who just getting started at Credit Invisible, or you're looking to maintain, reestablish credit, of course, the most important thing is making sure that you pay your bills on time as agreed, pay down those debt balances. The biggest thing you can do is really take an honest look at what your income is, what your credit situation is, or what credits you're looking to get to say, hey, is it realistic that I can pay myself back on time? I can pay these bills back on time and not get into a tight financial situation. Because you got to think about it this way. Unfortunately, there are situations that happen to where we can't pay our bills. If we unfortunately lose our jobs, if we unfortunately lose our income somehow, you got to think about, you got to consider, put that into consideration as well. Like, how can I try to make sure, I'm not in too tight of a spot? What does my savings look like if I lose my income for a few months due to being laid off unexpectedly? And what does these credit cards bills look like as a result of that as well? So you really have to take an honest look at your whole financial picture and see, okay, if I make X income, then I should be looking at this amount of credit to make sure I'm being responsible. And I can even pay it early if I want to, but I'll pay it as agreed on time and make sure that I'm in good shape. All right, and we'll go on to the next slide here. So another good question that comes up often is, again, how do we go to someone else? Like, this is a great presentation today. And of course, we're going to provide you with some resources, but also visit your financial institution. If you have a bank account with someone currently, see what options they have to help you with your credit, to help you build and maintain credit. See what options they have. There are some nonprofits, some great nonprofits in the country that you can look up for credit counseling. See what options they may have for you. And you want to see what education you can have to empower yourself and what counseling agencies can give you information about this. And of course, there's certified financial planners that'll take a look at your whole financial picture and really help you plan out step by step what your credit profile should look like, what it should look like for your savings and your whole financial picture. So, a lot of times with these situations, people feel real stuck.
No, I'm working. I'm in the office.
Oh, sorry. Yeah. So, sometimes you could feel like you're stuck with your financial pictures and not know where to go for help. So just consider this slide: financial institutions, nonprofits, counseling agencies. You want to make sure you have, some options to go to, and you really search those out, because if you just wait or you just let it consume you and say, I just know I got bad credit. I just know I got bad credit. You got to figure out how you can start to make steps. If it's in a bad situation now, if you start now, in 2 years, it could be a much improved situation. In 1 year, it could be a much improved situation. So, the more you worry about it, the more you could be trying to take small steps to act on it, so that in a few years, you'll say, you know what? I'm so glad I at least acted on it and I got started. I got the ball rolling, and now I'm in a better credit picture overall. So take those steps, seek out advice, and it'll certainly help you in the long term, and take action on it. The other thing I want to talk about is, oftentimes when you're in a tight credit situation where your credit may not be the best, you look at credit repair and debt consolidation agencies. They could be a good viable option. Number one piece of advice when we talk about these agencies is check their background, check their rating with the Better Business Bureau, check to see what they're actually offering as a solution, because you want to make sure that they're not giving you this promise of, in a month, we'll have you at an 800 credit score. It's not realistic. Right? It's not realistic. We'll have you at 700 in 3 months. If they're saying that, they're promising that, that's probably a red flag. You want to check the reviews on these companies. They can be solutions to help you solve your credit problem, negotiate debt with certain financial institutions, and helping you get that down. Can you still hear me? I'm sorry, I want to make sure. Okay, thank you.
Yes. Yep.
Sounds good. So, and then this next to last slide here basically is, you want to, again, take action. If you know that you're afraid to apply for credit because you're in a tight situation with your credit, think about some of the things we talked about here. Think about some of the agencies you can visit, some of the things you can do. Start by getting that free annual credit report and really taking that honest look and saying, hey, you know what? I see these things are on here. How can I negotiate these debts? How can I take action that'll improve my picture? It may not improve it today, the day that I'm looking at it, but looking at my full credit report, I think this is a great start for me. And I can say, hey, I'm building a plan. Within a year, within 2 years, I'll be able to get that credit card. I'll be able to, improve my overall financial picture and add extensions of credit because it's something I took the time to work on. It's the same thing as your physical or your mental health. It's one of those things where you got to take that honest look first and say, it's not going to happen overnight. What steps can I take? What reasonable steps I can take to see that improvement over time? And, I promise you, you'll start to see those improvements, feel good about it, and you'll be in a better overall picture in the long run. And with that, I think that brings us to the Q&A portion of our session. I want to thank you all for, taking the time and chiming in here. So what questions we can answer. If I can't answer it, we'll see if we can find an answer for you afterwards, but I'll try my best to see what you. I definitely appreciate everyone, taking the time today. It's always good to see people really encouraged about finding ways to improve their credit. And again, I know as Jackie mentioned, there's that tie-in to mental health because it puts a strain on us. It puts us into that state of, I don't even want to face these sort of things or these conversations because it stresses me out. But at least now at least some solutions you can do, some action you can take to get started. So Olivia, I'll let you go ahead if you can let me know any questions in the chat.
Yeah, thanks so much. I'm just taking a look here. There's a lot of great conversation and advice sharing. Not sure if anybody replied to this person, but somebody asked if you could clarify keeping old accounts open.
Oh, yes. That's a great point. So what happens is if you end up closing an account, it takes a ding on your credit score. So going back to things that factor your score, and they talk about new credit and total utilization. Let's picture this. This is probably the best way I can describe it. Let's say, for example, you have 3 credit cards at $10,000 limit each. 2 of the credit cards you use, but that third one you don't use, and then you close that credit card. You get a ding because it was closed, but that also shrinks your utilization, and it makes it seem like you have a higher utilization. By keeping that third card open, it expands your utilization even if you're not using it. So I guess the first portion of it is if you don't need it, don't necessarily open cards you don't need, but closing it could have a negative impact on your overall utilization. So if you go to apply for something else, it now looks like you're in a tighter financial situation.
Great, thank you. Another question from the chat. This person says, I paid my car payment off and my credit score dropped 2 points.
So that's a great question. Whenever you pay something in full, you may see that at first, but just give it a couple months, and what will happen is the credit reporting agencies will keep up with the fact that your utilization is now a lot lower now that you have that car paid off in full. So you may see that at first, but you give it some time, you'll see that score improve. Sometimes it takes a little while for the credit reporting agencies, and I'll be honest, they're not always in sync. So you just want to give it a little time, but definitely nothing wrong with having a car paid in full. So that's something that you want to make sure you take into consideration. Just give it a little time. You should see that improvement in your score, but definitely a good thing to keep that paid off.
Excellent. Okay. If a credit card company closes your credit card due to lack of use, will that negatively affect your score?
That can negatively affect your score in the same way that you would go in and manually close it, because that'll shrink your utilization. So oftentimes you just want to kind of do a survey yourself of, what credit cards do I have and when's the last time I used it? So if you don't want it to be closed, maybe you buy your groceries with it or something just to keep it active. So you may want to do that. Or if you do make the decision to close it, just know that it's just going to probably take a couple months for your score to go back up because it does negatively affect it at first. So it just really depends on what you want to do as a whole for your whole financial picture. If you really don't need that card, you don't have to force yourself to keep it open, but just know it could cause a strain for a couple months on your credit score.
Excellent. Okay. Another chat user said this question might be too specific, but any suggestions on how to deal with an old debt in regards to paying it back if it seems it's already impacted your credit? So certainly welcome your perspective there, but we'll also say to this person that managing debt is a topic that we will cover in a future session of this series. So certainly keep an eye out for that information.
Yeah, no, that's a great question. So it's twofold. So yeah, if you didn't pay it on time, you're definitely going to get that hit. it's going to negatively impact your score. But the longer it stays there, it's also going to negatively impact that. So my best suggestion is to see if you can negotiate that debt. Because, behind the scenes, it's if you have a credit card with a credit card company and you don't pay it off, that credit card company typically sells that debt to someone else. That someone else buys it for cheaper, and now they have your debt. So now they want to make sure you get it paid off because they just paid for your credit card debt. So they are more willing to negotiate that down because they want to get some money. They want to make some sort of profit from the transaction. So my best advice is to try to negotiate with those creditors and make terms that are favorable for you, because even though it negatively impacted you, that it was, sent to collections, it's also still going to be on your credit report. So you still want to make sure that you negotiate and you make terms that we can get that paid off so that it's taken off your report as a whole.
Excellent. Thank you. Okay. Another chatter said the free credit reports from annualcreditreport.com usually redact your actual credit score and require you to pay to access it. Can we rely on the free credit scores that many banks provide to account holders, or credit scores available through third-party websites like Credit Karma?
Yes, and actually that was one of the notes in the chat, because in my notes that I forgot to mention, Credit Karma is a website that has been known to be reliable for credit reporting. Just note that they are a for-profit company. So, the downside to that, or the thing you want to make sure you consider, is that the way that they make money is off of your information. So, maybe recommending that you credit cards and things of that nature. So there's that data collection piece that they make their money from. So just be aware of that. But they can be a source for you to get your credit scores and credit reports as well, or even going directly through the credit bureaus themselves could be another option.
Okay. And then looks like we've got a couple of people asking if you could sort of revisit the goodwill deletion comments that you had made. Sure.
So that on that slide, when we talk about that, that's something you want to discuss with the creditor, the financial institution directly, to see if it's something that they can do for you. But basically what it is if you missed a payment or you got a delinquency, is talking to that financial institution, getting paid up on time and getting everything situated to where you're all paid up, but then asking, say, hey, can I get a goodwill deletion for this? This was a one-time incident. I've been a long-time customer with you guys. I either had a financial slip up or I just forgot to pay this on time, and I don't want it to affect me in the long run. Can I get this goodwill deletion? So you want to visit your financial institution to see your creditors, to see if they offer that as an option.
Excellent. Okay. Looks like we have somebody asking where/how do I order the 3 credit reports in order to review them?
So you can go to annualcreditreport.com to get the full one, or you can go directly to the website of the 3 credit bureaus, Experian, Equifax, and TransUnion. And you're going to see that when we send you the slide deck afterwards. So you can go to their websites, their official websites, to get that as well.
Excellent. Thank you. Okay. It looks like we've got a couple of hands raised. So Pamela, if you'd like to come off mute and ask Terry your question, we'd be happy to hear from you.
Yes. For the annual credit report, you said you could get it once a year. Now, I haven't done this lately, but if you do a different company every 4 months, you could get it more than once a year. And I was trying to find out if that was still true, because I haven't done it lately, but I have done it in the past where, say, January, I would do TransUnion. Then 4 months later, I'll do Experian, and then 4 months later, I would do the other one. So that way you're checking on your score more than once a year, but it's still free. Is that still true?
That's a great question. I can't confirm that 100%. I just know from experience that annualcreditreport.com is the resource to go to. I would just double check with those credit unions, because I can't answer that 100% because I haven't tried it myself. But I know that for sure that annualcreditreport.com is the resource. So I would visit those other websites to see if that's true. But I don't want to give you incorrect information here, so I'm not 100% on that, to be honest with you.
Thank you.
Thank you. Another question, Alexis, I believe, had her hand up, but it may be in the chat. Can you consolidate credit card debt and keep those cards open? Can you consolidate credit card debt from different financial institutions?
Oh, yeah, absolutely. And, that comes in different forms. It really depends on where you're at in your financial situation. So I'll give you an example. Let's say you're still in a good credit position, but you want to consolidate your credit card debt and your loans. You can get a consolidation loan from a financial institution, and they'll pay down the balances. That doesn't mean that they'll close it. A consolidation loan is, let's say, hey, I want to go get a loan for, 20,000 to consolidate these 4 credit cards. Now I can get it into a structured fixed payment every month. What happens in that scenario is you get the $20,000 loan and then you pay those balances down to zero. So now your utilization goes down to zero, but you still have the availability. So that really helps your credit score. So you can absolutely, it just depends on if your credit score is good enough to get a consolidation loan. That is what's going to determine that. But people consolidate their credit cards and their debt all the time to get an easier fixed payment. It really just depends on the credit worthiness and the loan that you're applying for. And one piece of advice is make sure that it makes sense. So like the interest rate that they give you on that consolidation loan, it can't be higher than what you were paying on the credit cards because that wouldn't make sense, right? Like then you're not, you kind of put yourself in the same picture. Make sure it makes sense and that they show you, hey, if this is a 5-year loan, 60 payments, what does that monthly payment look like? And if that makes sense for you, you should certainly go for it. But yeah, banks do offer loans where you can consolidate it and you do not have to close it as a result of that. You can just pay it down to zero.
Excellent. Thank you. And then another question about Credit Karma that just came up a couple minutes ago. Is Credit Karma reliable in terms of a source of credit information?
Yeah, so based on information from the Better Business Bureau, they had been deemed as a reliable company for credit reporting. One thing I would just do is also just if you want to combine it, like cross-reference it with what you have on the annual credit report, because Credit Karma also has a feature, from my understanding, in their app where you can do the disputes for things on your credit report. They offer a way for that. But my only heads up I would say with that is they're not like a federal agency, right? They're their own institution. So you want to make sure you understand what the terms are you're agreeing to in terms of data collection and things of that nature. So I would just be cautious of that. But overall, they're a really good, highly rated company with the Better Business Bureau.
Thank you. And then it looks like we have time for one more question. A couple people are wondering, a lot of really great information and resources have been shared today, but if you had to leave the group with 3 top recommendations to improve credit, what would you say those are?
Well, I think the first thing is getting that credit report so you can look at it and analyze what that is, because the direction I would go in really depends on what that credit report says first, right? If that credit report says that I don't have credit and I'm credit invisible, then my recommendation would be to go and see how you can build credit and take some of those tools like the secure loan and the secure credit card to help build and maintain credit. If the credit report says I have bad credit because I got charge-offs and things in collections, then my next step would be to say, how do I go and negotiate these to get more favorable terms and see if I can start to get that paid down and see how I can get credit for some of those other items I mentioned in terms of things you typically don't see in your credit report. So you can have some good things pop up on your report. So I guess it really depends on what your situation is. But I would say my key thing is to start by looking at that report and seeing where you're at as a whole and seeing how that affects your whole financial picture. Because the thing is, what if you say, oh, that third option, I'm actually in a good credit position, then the next thing is if you're starting to get more credit, make sure you're responsible and you take a look at what is the worst case scenario in this situation. Like, for example, my job day to day as a credit analyst is to do that for corporations. If we're extending corporations credit, I would say, hey, what is the worst case scenario here for them not to pay us back? What sort of recourse do we have? We have to analyze and look at that. So you as an individual should certainly say, what is the worst case? If I'm taking out this really big loan and I'm relying on my paycheck and I'm kind of paycheck to paycheck and I don't have a savings, then it really doesn't make sense for me to put myself in this position to where, one layoff and I'm stuck. So you really want to make sure you think about and you're being responsible as you get credit extended to you and what that looks like for your picture. Because I know that, with credit, oftentimes, again, people's eyes get big. Oh, they're giving me $10,000. I got this car for $20,000. I remember when I got my first large credit card and I was like, oh, okay, this is great. I got all this extra money. I want to go on vacation or whatever. But then, also I work at a bank. So I was savvy enough to say, hey, I got to make sure that I don't put myself in a position to where I can't pay this back. I got to make sure I have a plan for these things. So, I think that's the biggest thing I could say is that make a plan for your financial picture, no matter what stage it's in, whether it's in credit invisible, whether it's good credit, or whether it's bad credit. Really take the time and make a plan for how you want to proceed to make sure you're in a good position at the end.
Excellent. Thanks so much, Terry. And thanks to everybody who asked such great questions in the chat. I'm sure that there were some that we did not get to, but we will take a look and we will find answers to those questions and circulate them alongside the replay and materials from today's call. Thank you, of course, to Jackie for joining us and sharing some of the great resources that Mental Health America has available for all of us. Before we go, I just wanted to remind everybody that this conversation is just beginning. We invite you all to join us for our second session in the series on October 8th to discuss how you can establish a healthy relationship with money. That session will cover a variety of topics, including some that came up today, like managing debt, savings, wants versus needs. So we hope that if you found this session helpful, you'll join us for the next one. As we've been saying, we will circulate the replay to this call, the materials, links to register, and answers to any questions that we did not get to in the chat. But otherwise, thank you all so much for taking the time today to attend this session. We look forward to hopefully seeing you all on future sessions. Thanks so much, everyone, and have a great rest of the day.
Yes.
Thank
Thanks,
you.
everyone.
Thank you. Great job.